Welcome back to another video, guys. Thank you guys for tuning back in. I have not been active in a while. I think the last video I made, as you guys saw by that intro, was 2 months ago. And I'm just going to make this short and quick by saying that the reason why is because school. And yeah, school comes first. But nonetheless, I will try to make a video, at least one video a week going forward. I know I've said that before, but I'm going to try to see how long I can uphold that promise. But for the foreseeable future, I have cleared up some time, and, winter break is coming. So I can see myself definitely making more videos. But what has happened in these past 2 months? Not much has happened. There's only been 3 major trades that affected my account, I guess, bigger. For the most part, it's just been small, consistent gains throughout these past 2 months. There has been 2 trades that were a little bit big on the red side that made me lose quite some money, but there was also one very big trade that basically canceled all those losses. And so if you guys see from last video, I think we were at just right around $10,000. Right now we're at $10,300, but we're basically at $10,400 because I'm waiting on some dividends to come in December 1st. So overall, about a $400 gain from last time I made a video. But yeah, so today I'm going to try to keep it short and simple. I'm not going to go through all the trades that I ended up doing these past 2 months. I'm just going to go over the 3 trades that ended up affecting my account the most, and I will also go over what I ended up trading this week because I only ended up taking one major trade. The other ones were 2 small ones. But let's get right into the video. So we're down $130 for the day. This was on Friday, but for the week we were up $160. So overall, a pretty good week. I'll go a little bit later on in the video explaining what trades we ended up taking that made us win $160. But first of all, we got to go back basically 2 months ago, prior to the last video I made. The position which I had that ended up costing me quite a bit of money was a couple of if I can find them, couple of long-term Apple call options. If I remember, they were the 130 call options expiring January 15 of 2021, as you can see, guys, right here. So what ended up happening on that trade, I know I was really confident on that trade, especially because 2 months ago, the market seemed to be doing a U-shaped recovery, or a V-shaped recovery. Right now it's kind of just stalled out. But, weeks and days kept on going by, and Apple really was not making a move neither towards the upside or the downside. It was basically stuck in between this range of 110 and 120. And so for me, that was, very difficult to try to keep it profitable, even though I was selling covered calls against the long calls. And so basically the time decay was eating into the position a lot. And so I think the loss was somewhere around $1,200. And, looking back at it right now, I'm glad that I ended up taking the loss because for the foreseeable future, these past 2 months, like I said, it's just been trading in this range of 110 to 120. It hasn't really made a huge move towards the upside. And so those contracts, let's just go ahead and take a look at what they're valued right now. And we would have still had them. Let's see, they're valued right around $162, and so we bought them. We had an average price around $700. So you can see how much we would have lost if we would have still kept them up to right now. So pretty glad that I ended up selling. It did good on cutting losses. Unfortunately, it did not play out as I would have wanted to, but you gotta move on. Now that we're still here on Apple, let me go ahead and explain the trade that I ended up taking this week, and then we'll continue explaining the trades from those past 2 months. But for this week, what I ended up doing was the wheel strategy. If you guys don't know what that is, I have several videos on it on my channel. Make sure you go check those out. But what we ended up doing is purchasing 100 shares of Apple, and yeah, so basically we purchased 100 shares of Apple. And I know what you guys might be thinking, how was I able to purchase 100 shares of Apple if it's at $117 and we only have $10,000? Well, for these past 2 months, I've also opted into Robinhood Gold, which lets me leverage my account by twice as much money. I'll go into a separate video explaining why I think that's a really good idea and why I've been able to use that to my advantage. But essentially, I have buying power worth up to right around $20,000, and so that's how I was able to purchase 100 shares of Apple. So we purchased them at $117.35. On this overall position, we're currently down $20, but that's okay because what we ended up doing was selling the 118 call, and we ended up receiving a credit of $110. And so because Apple ended below 118, that means we were able to keep the full $110 premium, plus we also got to keep the shares of Apple. So going into next week, I'm looking to sell possibly the 118 or maybe the 119. And so as of right now, if the prices were to stay similar to what they are right now on Monday, we're looking at a guaranteed win of at least $100 to $130 as of right now. That could possibly change. Hopefully Apple opens up higher, making these premiums rise even more, meaning that we would be able to get at least a guaranteed amount of maybe roughly looking at $150 to $200. That'd be great. But we're gonna have to wait and see how this plays out Monday. But I'm feeling relatively pretty good. The overall sentiment of COVID has been pretty optimistic right now, considering there's been a lot of news of potential vaccines. But now on to the next trade. So the next big trade that ended up wiping roughly $800 off of my account, and this was recent. This was like a week ago, and it was a mistake because I was up around $300. And when I went to go try and sell it, it missed my limit entry by I want to say like $20 to $30, and so after that, it ended up moving towards the opposite direction, and I ended up just cutting losses. And the trade was on Amazon. What we ended up doing was buying a 3080 put, expiring in 2 days. Yeah, so we bought it November 11th, and this was a little bit risky on my part. Probably shouldn't have done it. Definitely looking back, I see it as over trading because normally I don't trade options that are expiring that close, and especially I don't trade with that big a position size. And so this was definitely a big position size worth almost $3,000, and like I said, we ended up losing around $800. But as you guys can see, and this was I think 2 weeks ago. You can't really see it right now because this chart is a little bit messed up, and I would have to go on Thinkorswim to fully explain it. But basically, what ended up happening was Amazon ended up going higher, and it overextended even more. And then I think on Friday it opened somewhere around 3,160. So it did a really good job on cutting losses. But in the first place, looking back, I just really shouldn't have taken that trade because it goes against the principles that I trade upon. But, that's pretty much it for that trade. The next big trade that I ended up taking, which basically made up for those two losses, the Apple loss and the Amazon loss, was on Wells Fargo. And this was a trade that I ended up taking almost, I want to say, close to a month, just because it was going super well. And this goes back to the time when I first started doing or using Robinhood Gold, and I leveraged my account money. And so we had a total of around I want to say 700 Wells Fargo shares. If I have to go back and look, yeah, around 700 Wells Fargo shares. Yeah, because it's at 7, so 7 times 100, so 700 shares of Wells Fargo, and the position size originally was around 15,000. If I'd have to go back and look at it, but because we were buying in increments of 100, and this, like I said, this was a trade that I ended up taking over the course of a month. And so within that month, every week I would do the same wheel strategy. So sell around $1 to $2 out of the money call options against the 700 shares. And so what that allowed me to do was collect anywhere from $100 to $200 on premiums because I had so many option contracts. And so essentially I ended up doing that for about a month, and my original average price for those 700 shares was, I believe, $21 and around 40 or 50 cents. So it was a pretty reasonable average because we got in the course of the time when Wells Fargo was at its 52-week low, and so within that month, Wells Fargo slowly kept on climbing, and so that on top of the premiums that we sold was just basically coming into a combination for a great trade. And so finally, this past week, so last week, we finally got them called away. We sold the $24 call strike, and we got a premium of $427 just for selling the call options. And like I said, they did get called away. I would have liked to hold on to this position even more because, as you guys can see, Wells Fargo is currently trading at $25.49. So we definitely left some profit on the table. But I think what like kind of got me upset. And I guess I really can't say it got me upset because, I made a lot of money on this. I think the total amount on this trade that took over a month was somewhere between I want to say definitely over 2,000, because I know on the shares alone the gains were roughly 16 to no the gain on I don't know what I'm saying, but I want to say the gains, I'd have to go back and look at the math, but the gains on the shares alone, so not taking into consideration the contracts that I was selling, was roughly $1,600, $1,600 or $1,700. And I know that because I was selling options for over a month, that easily put me over $2,000 on the gain. But nonetheless, back to what I was saying, the reason why I was sort of upset was because they got called away by 4 cents. And so what I mean by that was that last week, Wells Fargo ended up closing at $24.04. So if Wells Fargo would have closed 4 cents lower, that means we would have been able to keep the 700 shares, continue on to selling more option contracts, and possibly gain another maybe $1,000 to $2,000, because as you guys can see, Wells Fargo is currently $1.50 higher than from where we sold it at. So that's unfortunate, but like I said, I can't be too bad because a $2,000 gain that basically covered the losses from those two big trades of the Apple trade and the Amazon trade. So as of right now, like I said, that's why we're currently sitting at $10,300. But essentially, that's $10,400 because, like I said, we're waiting on the dividends from. Where can I see this? I don't know where they're at. I think they're here in investing. No. So I don't know exactly where to look at them, but I know we're waiting on the dividends for Wells Fargo, and I think the dividend payment that we're going to receive is $70, so that puts us close to $10,400, just rounded off. So over these past 2 months, we've been able to, even though we incurred some two big red losses, we've been able to climb out of those losses and basically $400 in the green. And so going on to what I plan on doing for the remainder of the year is continuing doing this wheel strategy, and hopefully, I think a reasonable goal will be to aim at least $11,000, because we have, like I said, 2 months left of November and then 4 months of January, or 4 weeks. So it's looking like I can definitely hit at least 11,000. I wouldn't be surprised if we reach closer to 12,000, especially the way things have been going right now. But, we're just going to have to wait and see how it all ends up playing out. But that's pretty much it for this video. I hope you guys enjoyed it, and I will see you guys in the next one.